The stock market action this week has been enough to make a person dizzy. The opening week of the markets have left the analysts and the pundits spooked. Did the week spook you? Let me know in the comments. Seriously, I'd like to know if you feel like, what? Anyway, we know the old saw that the one thing you can always be certain of is that nothing is certain, and nobody was expecting this pretty awful start to the year. Tesla ended up down 6% for the week, but was already down about 4% from its recent high for a total of a 10% off in the recent going. That despite the CT launch and the subsequent drumbeat of totally positive reviews, the Optimus video that also saw incredulous reporting other than in the mainstream meeting, and the beat on numbers, which rarely included the word beat in the headlines of any of the press. Meanwhile, the NASDAQ was down about 3.7% over the last 4 days. This would be somewhat normal delta for Tesla, down around double the NASDAQ. The NASDAQ also is down about 4.5 from its recent high of 15,125. The S&P during that period was only down 2.3 from their recent high, but down 2% of that amount this past week. We had the Fed minutes this last week, which the market seemed to feel was a tiny bit more hawkish than hoped. And the release was the same day as some sort of hawkish words that came from one of the Fed presidents. The ADP job numbers this morning were okay. I mean, yesterday were okay, as were the job numbers from the government today, but both showed more payment increases. The payday, the amount that people were being paid, those increases were more than the Fed's goals. So it was a little questionable on that. Bond yields, which had touched 3.77 at the end of the year, rebounded to 4.05 during the week and ended there today. This sell-off on 30-year treasuries was a big part of the unhappiness of the market, especially when it came to Tesla and the NASDAQ. Analysts are running away as fast as they can from their earlier statements that the Fed will, must, has to cut rates in March. I'm betting that Cathie Wood will say that they should and must, but she might back away from her expectation that they will. I'm going to bet that Larry will feel about that about the same way tomorrow when we talk about that. Be sure to tune in. I personally think it will all depend on the data, though, and whether the Fed drops in March or not. We have the CPI and the PPI next week, and then again in February before the March meeting. Then we have the all-important PCE, which will come out in January and February before the March meeting. And what they're going to be looking at the most is going to be that 6-month PCE, which right now is down around 2%. And I don't think it's going to go up. In fact, it could drop below 2% and give us a 6-month at less than 2%. What would happen then? I think the Fed would cut for sure, especially if there's any hint that the economy is starting to take more of a hit than they would like to see. So I think the Fed still moves in March, and I think they should, and I think they must, and I also think they will. Somewhere around 60% of economists are still in that camp. Hey, this is Randy Kirk, in case you had forgotten that. I'm the guy that wears the funny shirts, and I'd like you to like and subscribe. Would you please do that? Just take a second. Just reach up and push that like button, hit subscribe, hit notify. You're going to want to be here tomorrow morning early, about 9 o'clock California time, 10 o'clock California time. Larry and I will be recording tomorrow morning our analysis of Cathie Wood and her analysis tonight of what's happened in the last month and what she sees going forward. I'm going to guess that both Larry and Cathie will also be very concerned about the money supply drying up and quantitative tightening continuing in this market situation. Also, want to make sure that you get your Cybertruck bottle opener, and check it out. How can you not want one? You need 2 or 3 of them. One for your boat, one for the cabin. If y'all have cabins? I don't have a cabin. I wish I had it. No, I don't really want a cabin. All right, let's go on. Or a boat. Let's hear what we got here. Oh, and join Patreon. We now hit that $3 level, if that is more satisfactory for you. And quite a few people signing up for Patreon this week. Thank you so much for participating and helping to produce the channel. All right. So I finally looked up how to pronounce Kobeissi letter. Kobeissi is how I'm pronouncing it. No, I looked in that pronounce thing on Google and it says it's Kobesi. So from now on, I'll try to remember that this is the Kobesi letter. Now, you know what I think about the Kobesi letter, and maybe, he'll be mad if I say this again, but I think that he really digs up very clean data. I think his analysis of the data is questionable, as you'll see on this. So he says about the labor market this morning, he says, out of the 10 out of the last 11 jobs reports revised lower. Is that weird or what? That looks like manipulation. That looks like, and he suggests in a minute, we'll talk about that, but that, the administration might be popping higher numbers that are the headline numbers. And then a month later, it dropped 35% this last month. So that's pretty crazy. He goes on to say that 25% of job gains in 2023 ultimately were revised away all year long. So this 35%, while huge, not totally crazy compared to other months. He says that government jobs accounted for 25% of the December job gains. He says that part-time jobs were up 762,000, while full-time jobs were down 1.5 million in December. So he doesn't give any analysis on that. My analysis on that would be, we do have the job. There's so many more jobs than there are positions, and there's so many jobs that companies can't find anybody to take. They can't find qualified people to take. And so what you've got now is you've got a lot of people taking part-time jobs because they can, and it's going to help their family. And that's been going on pretty much all year. I would anticipate that this will start to slow down in 2024. And then finally, he says, full-time jobs are flat for 2023, while part-time jobs are up sharply. And again, I think that makes sense. I can understand where that's taking place right now. All right. What is going to matter to markets in the next few weeks, way more than the Fed cut, is going to be the profits and the guidance coming from the earnings report that are starting out in these next 3+ weeks. I suspect that there's some nervousness right now, a hesitancy to get fully invested in equities or bonds right now. And that's what I'm hearing from the articles I'm reading and the pundits that I'm listening to. There's this hesitancy. There's like, what? Maybe not. Not enough data right now, but by the middle to the end of January, everyone should have plenty of data. They should be able to make up their minds once these earnings reports start coming out. Once we start seeing the CPE and the other inflation reports, I think we'll also hear from the Fed a million times between now and then. So I don't have any special research other than listening to all these guys, but the overall mood is still good, expecting good earnings and good guidance. And it all starts with JP Morgan Chase, Citigroup, Bank of America, and Wells Fargo, all four reporting next Friday, a week from today. Of course, Tesla is right in exactly the same boat. Margins and guidance, that's what people are going to be looking for. They're going to be looking for maybe some announcements and maybe some special things that, we don't know that we'll learn in the earnings report, because that's how it always works. But those two things, the margins and the guidance, will be key. Also, the energy numbers, that's like a third one, but it won't be as important as margins or guidance. So those will be very key to the fundamental case for Tesla coming up. If margins are up even a point, and or if Tesla guides to 2.2 to 2.5 million, like Jeff suggested the other day, that could give the stock a pretty serious jolt. I know I'm calling $410 a share by the end of the month. I know that sounds absolutely nuts at this point, and it is I'm starting to wonder, how is it going to possibly get there? But I'll give you more updates around the 15th as to whether I think that's a chance or somewhere around the end of January, meaning, into February, whether I'm still thinking that way, because, you get to change your mind. All right, given all the positive stuff that's going on, though, we should already be well along on that journey to all-time high. But Mr. Market had other ideas right now. The macro just isn't ready yet. So adding to the ever-growing stack of positive notes on Tesla, I think this is the fourth note in the last couple of days. This has been 3 days. That's been positive on Tesla. Sawyer Merritt's reporting this. Tesla has been named a 2024 top pick by Argus Research, which is an independent research company. He says, we see Tesla, not he says, Argus says, we see Tesla as the leader in the EV industry with recent entrance to the EV market for General Motors, Toyota, and VW now struggling to right-size their future CapEx budgets. We believe Tesla has an opportunity to grow market share in 2024. Well, that would be the last thing I would care about would be market share. Market share against all vehicles? Yes, I want to see that grow and grow 50% a year. But growing market share against the other EVs could care less. It has nothing to do with Tesla's prospects. What does have to do with Tesla prospects, in the car part of the business at least, is how well they execute on driving those numbers into that 50% per year CAGR that they've been promising. And I think that they will do that. Maybe this year will be that off year, and next year will be the year when they catch up. I'm thinking they can do it this year. I think they can stay close to that 50% CAGR. We'll see what happens as the month rolls on, and we see what they're telling us their expectations are, and then we'll see how the year develops. Anyway, then we have this from Al Root at Barron's, just out. Many years ago, Al Root says, a fund manager, a Tesla bull, explained the way he managed his position in Tesla. When shares were beaten up, he would buy more stock at up to about 5% of his portfolio value. When shares were soaring, he'd sell his position down to 2%. So that seems sensible to Root. And though we too, his whole team, are long-term Tesla bulls, we believe that this is the time to be at the low end of the range. We recommended selling up to half our position last June when the stock was trading above 250, leaving us with roughly our original stake. With shares still at similar levels, we see no reason to sell more at this time. Now, though, everything hinges on the Model 2, not. Sorry, I gotta opine here. It's not about the Model 2. The Cybertruck will make more profit than the Model 2 for at least the next 2 or 3 years and maybe forever. The semi-truck will make more profits than the Model 2 forever. The energy division will make way more profits than the Model 2. The robot and FSD and robotaxi will make dramatically more, like 100 times more profit than the Model 2. Now, will the next-gen vehicle be an important statement by Tesla? Will it be something that generates a lot of interest and enthusiasm and excitement? Yes, but it is not. Everything hinges on the Model 2 next-gen vehicle. Anyway, last quarter, China's BYD sold more electric battery vehicles than Tesla, mainly by selling cheaper vehicles. Tesla had one coming. It was already announced plans for a lower-priced EV, but when the car will arrive is still a guess. Collecting orders in late 2024 and seeing them on the roads in mid to late 2025 is a reasonable guess. Okay, everything's wrong with that. Number one, who cares whether BYD sold more battery electric cars? It just doesn't matter. What matters is how many does Tesla sell? They've announced their lower priced EV, and they will come when that makes the most sense. And when that's going to make the most sense is not middle of 2025. They will be out later this year, probably in the third quarter. But if not the third quarter, certainly by the fourth quarter, we will see them rolling out. Until then, Root says, we are content. What's that word? We're content holding what's left of our theoretical position. I guess maybe this is a play game. Don't know well enough what they're doing. So maybe this is not real money. It rarely pays. Here's a big one. Listen to this now. This is the smartest thing he said in the whole thing. And I do like Root, by the way. It rarely pays to bet against the market leader, even one as volatile as Tesla. Now listen to this. AAA is out today saying that the incidence of BEVs running out of charge and having to be attended to by the company is dropping to near zero. They say this will be a non-issue for car buyers soon. Oh yeah, okay, listen to that. Now here's another take on the same issue about how long it takes to charge up a battery electric vehicle versus how long it takes to charge up a gas vehicle. Listen to this from Whole Mars blog. People often imagine filling gas takes no time, but that's not true. This is a study. On average, refueling adds 20 minutes to your trip. You need to count not only the time spent fueling, but the time spent paying, driving to the station, getting back on the road, and the time to buy some stuff in the mini mart. See the study below. I'm not showing you this study, but it was conducted based on analysis of 14 million trips across 150,000 cars. And it's coming from onboard computers and it's 100% accurate. Fueling up is quick, but driving to the station, getting back on the road takes time, especially in cities with very heavy traffic like Los Angeles. In fact, in Los Angeles, refueling adds nearly 30 minutes to your trip on average, and that's before you go to Costco and wait in line for 15 minutes. Even though less than 10 minutes of that is spent at the station. There's just so much traffic getting in and out, it takes 10 minutes on average. All right, Sawyer, I thought that was amazing. Sawyer, and of course, if you're fueling at home, you don't have that issue. Sawyer Merritt says, news, Tesla has been named a 2024. Oh, I knew that I had that down already. I just lost it. All right, let's go on here. X had the highest return on ad spend of any social media platform. Let that sink in. If you think that was a independent report saying that they're getting the best, I'm sorry, it wasn't an independent report. It was an advertising agency, and they were comparing their various clients and the ad spend that they were doing for them. Where were they getting the highest return on investment? It was X. So if you think advertisers will continue to boycott if they know that that's true, I've got a bridge that I'd like to sell you. Actually, one or more might stay away because of these ridiculous woke opinions, but they do so at their peril. Very small advantages work when you have actual competition. Oh, of course, there is no pre-market on Friday, but we'll take a quick look at Tesla just for fun to see it is down 14 cents in the after hours, okay? Say, I was really pretty happy with my video that I put out around noon today. It was about the crazy year ahead. Elon Musk said he expects an even crazier year in 24 than in 23, but for some reason, my wife and my mom were the only people that watched it. I mean, it was probably the worst video that I've had in viewership for the last 6 months. Anyway, if you have a minute, you might at least give it a look and then let me know in the comments there if I was completely wrong and it was not a very good video at all. Maybe it wasn't great. I did say some political things in there, but they were the same kind of things that Elon would have said given the chance. I mean, really, I'm just pretty much exactly in line with him on the stuff that had some political element to it. Anyway, now on this video, if you liked it, or if you like me, or if you just like the channel, hit like, please. That just helps the algo, as you know. And then hit of course, the subscribe, the notify, so that you become aware tomorrow morning when Larry and when the video comes out on that. And then, by the way, I was going to put that card up earlier. Make sure that card will be there. And then also, let me just go over the numbers here for you again, really, really quick. Okay, it's only $25. Now, if you'd like to spend $29.95, where people are buying these every single day, you could go, well, not every single day. Let's see, I think I've sold 3 this week. So 3 out of 5 days. All right. So you can buy it on Amazon for $29.95, but because I like you, or because actually I don't have the same expenses associated with you buying it directly on PayPal as I do with Amazon, I can sell it to you for $25, or if you buy 2 for just $45, if you buy 3 for just $65, if you buy 4 for just $90, and if you buy 10, I can get it all the way down to $21 a piece, $210. So all you have to do is send the money to paypal.me/ all lowercase letters, Randy Kirk, just spell it out. And then if you're outside the country, please add $20. And if you're in the Pacific, all that stuff, like Australia, Japan, all that over there, if you're in that area, please add $30 because the freight just kills me going to that part of the world. And then notify me, camouflage or regular, it saves a lot of time and emailing back and forth. Please join Patreon. If you join Patreon at the $10 level, you get one of these babies for free, or you can get 2 of my books for free. I'm going to make a deal this week for all of January. All of January, you get 1 book, audio book, and the Cybertruck for free if you join at the $10 level. Remind me about that. I'll try to remember to put it in the description below with all the rest of the information. Okay. On the $5 level, you get 1 audio book. Okay. And then at the $3 level, you get my thanks. That's it. So that's all I've got for you right now. Next week has got to be better. We'll see what happens when those banks report, and the CPI is next week too. It's been great talking to you.